Hello, this is Rich Canleone coming to you from the CME Group trading floor. Today's segment is going to be called Earnings, Earnings, and More Earnings. Obviously, we're in the midstream of the earnings scenario with respect to the U.S. equity market, particularly the S&P 500. In the last couple of days, I'm sure we've all been keeping an eye out there. Day traders, institutional traders, and the like. IBM in the last couple of days, Yahoo and Intel yesterday, of course, have not only beaten the street, but handily have started to take off. Intel is a perfect example. The Intel numbers were 56 cents versus 45 cents. That is 11 cents over. By anybody's standard, that's a large deal. For cash indexers, that's even more of a large deal that you can even think about. At any rate, when you look at the earnings and the drive that it's creating in the U.S. Equity futures market, particularly the S&P, a lot of times those asset managers will go ahead and utilize the S&P contract to go ahead and hedge exposure or gain exposure. And what we're noticing here at this point is particularly we only have actually just shy of 15% of the S&P 500 in. However, 70% of those have beaten the street handily, and again I reiterate handily, and only 12% have actually had a downtick. How does that compare to last year? That suggests that you actually have a very strong comparison. So I think here's what you have on the table. I think you've had a lot of money managers who, in the light of the geopolitical scenario, the issue in the Mideast, the issue with Japan, have not had full exposure to the market. And now, once you see that the earnings strength is really starting to come through, especially when you're looking at bellwether names like Yahoo, like IBM, like Intel, now they're beginning to chase performance. In fact, we're looking at an area where we're starting to see hedges come off to protect from downside. What we're looking at levels now, let's not forget that the S&P cash is the big thing to look at this point. We actually opened today with a gap in the S&P cash that was $6.50. We settled yesterday in the S&P cash at $13.1262. We opened this morning at $13.1912. Put that into perspective because fair value is negative $4.22. That is where the futures are supposed to be trading. You have a bunch of support at this point. You're looking at that gap as stabilizing all your support. Trade it smartly because that gap is going to lead to an extension into the 25, the 30, and the 35 strike. Let's not forget that the year high is within reach. The year high was $13.39 and change in the cash. I would think that at this point, before the end of the month, that is what you're going to be addressing, especially since you have a thinned market given the Passover holiday and the Holy Week session. Trade smartly. This is Rich Canleone signing off for the CME Trading Group floor. Thank you.